Welcome to this video, and in this video I want to show you how you can actually trade boom and crash volatility 75 without stress. And in this video I'll be showing you how you can actually make a lot of money for yourself, even if you're a busy person and even if you are on the go person. So this strategy is the easiest that you can come by, and if you stay tuned to the end, you're gonna benefit 100% from this video. So if you're new to this channel, I please subscribe and also click the bell button so you get notifications whenever we upload videos like this. And also, if you're not part of our community, that is the Telegram or the Facebook community, I implore you to please go and join those channels. For instance, if you're a busy person and you hardly check your chart, you're gonna like our community because we usually send signals from time to time to those communities, to those groups. So if you want to be a partaker of this, you do yourself a lot of favor by joining that community. And the reason why we're doing this is because we want to see a lot of persons grow as traders, because right now the only one of the best way to get out of this financial struggle is through trading. Trading is one of the easiest way and the most convenient way that you can actually achieve all this. So do yourself a lot of favor and be part of the community. So I'll be expecting to see you in the community. So quickly jump into this video. Like I said, this video is strictly for those that are busy, or even if you're not a busy person but probably you're on the move, you're always on the go. It's a strategy that is gonna be easy for you because you don't need to look at much criteria to actually place your trade. Now, jumping right into my screen, you can see here that I'm on the volatility 75 chart, and what this actually does is simple. How you can actually do this simple. So let me first of all set up the chart for you so that you're gonna understand how to use it. So the first thing you really want to do is just to add your indicator. The only indicator you're going to be using or needing is the stochastic. So you're going to be needing the stochastic indicator, and we're going to be using let's use 933. So that's this. So you're going to be using 933 and you click OK. Alright. Okay. Sorry, my indicator is looking a bit different. Let me change this. Okay, sorry, this is black, so it ought to be white. Let me just reset this. So okay, this 9. Let's make this line then. Alright, so I think we are good to go. Our scale, our levels, let me make this white. Okay, alright, so here we go. Sorry, let me just make a few. Okay, I think we're good. Alright, now you can see this. Now the next thing you want to do is you want to put on properties, your period separator, then click OK. Now I'm going to explain why I'm doing all this to you, and also you want to work with a smaller time frame because you're basically scalping. You're taking profits fast, quickly. So that's what you actually need. Now the next thing you want to do is you're going to be looking for the high and the low price of the previous day, and you're going to be trading off them. Why are you looking for the high and the low price? Now the thing is, it's been known that the high and the low price of the previous day are strong resistance and support. So if you can lean on them to place your trade, it's going to be very, very profitable, because these are levels that actually holds a particular day. It's like a range that holds a particular day. So the easiest way to actually get this is, first of all, go to your daily time frame. Now you can actually expand this if you want to see it properly. So this is today's candle, this is yesterday's candle. Don't forget I'm on the daily chart. Then this is day for yesterday's candle. So all you need to do is just to draw a line on the top wick and the bottom wick. Alright, so this gives us the range of yesterday. This is the range for yesterday, between here and here, and it was a bearish move. So you can see, so you just go to your 5 minutes time frame. So now you can actually drop this, so you can see this. Now you can see the reason for my period separator. This period separator separates the candlesticks into days, So this between here and here, this was what happened. So, and you can see that from here to here was the range of the market, and you can see it fell from here to here. So it was a bearish market all through yesterday. Yesterday was a very strong bearish market. So now the next thing you want to do is you want to see reactions around that particular, around this resistance and support zones. If you remember, I told you that these lines act as support and resistance because they are the ones that hold a particular day. So the high is the resistance, while the low price is the support. So now you want to see reactions of the price around this level or this level. So now you can see here, you can see here that when price touched here, it bounced up, touched here again, and bounced up again, came down and formed a double bottom on this particular support level based on yesterday's low. So, and if you remember what I taught you in one of the previous lessons, you can go back and watch it so that you can have a proper understanding. I spoke about chart patterns. Now, double bottom is a chart pattern that helps you to spot reversals. It helps you to spot reversals. So in this particular scenario, we are expecting that the market will push higher a little bit for today. We don't know how much to push, but at least you can take here as, you can take this level here as our target. So you can just, since we've seen a double bottom, you just allow price to push to the upper side. Okay, so let's do some back testing. Let's draw for the previous day. Let's draw for another day so that we can see. Let's draw for a day that is already completed. Okay, so this is the low for this particular day. Then let me put the high. This is the high for this particular day. Now, okay, so now let's see how it reacted here. You can see that the price dropped. You can see it was a downtrend all through. You can see price hit here and was and was moving up and was consolidating, sorry. Then it came to touch here, then you had what we call, you can see right here, you can see we had some consolidations here, then the market dropped. When the market dropped, what happened? You notice that it came and retested this level. It came and retested this particular level. You can see it still dropped, retested, dropped, retested. So it still even formed, so around this level you can see it formed a double top. Formed a double top around this level. Then the second thing you want to use as confirmation is, you can see that your stochastic here was overbought. You can see it's overbought here, around here. You can see right here too, it became overbought. You can see the same thing. So that is the second confirmation that you could use. You could also go further to use a third confirmation if you wish. You can decide to use a third confirmation, and you will see that, you can see right here, this is a piercing, this is a bullish, sorry, this is a cloud, a bearish cloud. This formation, these two candles is a bearish cloud. You can see this one too. This is is it, I think, a morning, sorry, an evening star, either a morning star or evening star basically. Then you can see it dropped. You can see it dropped here, then it dropped further, and it continued dropping. So what you want to look for is reactions around these levels. Okay, let's draw for another day. Let's see what we're going to get. Okay, and for this is the high. Okay, now you can see price, you can see on this day the price touched this level and bounced up. Okay, oh sorry, okay, you can see price touched this level and bounced up. All right, and at this level you can see price was actually oversold. Price was oversold, and even at this point, at this level, you can see we had a divergence. You can see this divergence here. There's a divergence here. Let me draw it so that you can see it. You can see there was a divergence here. I'm just showing you forms of confirmation that you could use. You can use about 2-3 confirmations if you like. No, if you know, in Forex there's no particular static way to achieving your goal. That is why it's good you have requisite knowledge of how the market of different strategies. So you can actually have a particular strategy of how you get confirmations, of how you actually spot trades. Then in order to back up your strategy, you can use several other strategies as confirmations. For instance, this particular strategy I'm teaching you is using the previous day high and the previous day low to trade in the next day. But after you've spotted reactions around that price level, you see, the next thing you do is you check your stochastic if it's overbought or oversold at that level. So that's the strategy in itself. Now, to actually give you more confidence to trade the strategy, then you can look out for things like divergence also around such levels, or you can look for candlestick formations, candlestick reversal or continuation formations about such levels, or you could look for chart patterns like the double top, the wedge, the inverted head and shoulder, you know, the double top, the triple top, the double bottom, the triple bottom. You can look for all that around those areas to confirm whether the market is going to continue downwards or is going to retrace or reverse upwards. So in this scenario, you can see the divergence played out. The divergence played out, and you can see it pushed up a bit to this overbought level, and you take your profit. So you can see the same thing happened here. You can see the same thing happened here. You can see market was reacting around here, reacting. You can see it dropped to this level, but you don't take it because it didn't react. It didn't because it broke this support and was consolidating around it. So you could actually take this because the market dropped, tested here. You can see here, this is another cloud formation. Then you can see it was oversold. Sorry, it was overbought here. I see it was overbought here. So what do? You just take your trade without stress. Take your trade without stress, and you can see the market pushed lower. You can see the market pushed lower than this level. You see, later came back here to even retest and dropped. You can see that. So that is it. So that is how you could actually make use of this strategy. So let's do just one more, then we'll be out of here. Okay, let's do one more, then we'll be out of here. Okay, I think let's see this level here, then let's use this. Okay, can use this level. Now you notice that for this particular strategy, for this particular week, you notice that this is not the highest point. This was the highest point here, but you realize that but I use this as my highest point. Why? Is because you notice that when the market got into the next day, you notice that the market was in a strong trend move. So this tells you that there's nothing stopping the market at this level. There was nothing stopping the market at this level when the market entered the next day. So this tells us that this level is not important. Then you look for the next level that got stopped out as resistance. You can see it pushed up. This is where it got stopped out before the market broke it with this low candle here. You can see the market broke this level with this low candle here, then it continued upwards. So we're going to use this as our resistance. So you can see it entered the next day, then it pulled back and reacted around this level. Then you can see the market, or the stochastic, was also oversold, and you pushed higher and you make your profit. So you enter here and make your profit here. So you can see the same thing here. You push lower. You can see your divergence here. You can see your divergence here. You can see. So it means the market pushed up. Very simple, just as simple as ABC. You can see it touched here also. It touched here, then pushed up. You can see double bottom, triple bottom, fourth bottom. So then it pushed up. Very easy. You can even see another divergence here itself. You can see candlestick formation here. You can see this. You can see this a hammer. You can see this hammer. Yes. So that's that. Very, very simple. Then you make your profit. So this is how you can actually make a lot of profit in the market, and without stress, without, even if you have a busy time, all you need to do is just be good and just try as much as possible not to overtrade this. You could just monitor maybe 3 or 4 charts so that it doesn't choke you. And if you have much time to yourself, you can monitor more than 3 or 4. You can monitor as much as you're convenient with. So this is an easy strategy that you can scalp with and make money fast. And trust me, you'll be making money on a daily basis. So I remain your boy Leke, Cosby Finance. Do not forget that if you want to get strategies, just go to the description below. You'll see the link to our Facebook, our Telegram group, where we send signals and you can be part of the community. And if it's your first time, please subscribe, and also do not forget to share this video with your friends. So I'll see you in another video. Bye for now.